A very good Friday morning to all my friends and fellow traders. This is Doug Campbell with Right Way Options, coming to you with your morning market preparation video for December 8th, 2017. So yesterday we finally had a little bit of recovery. We saw the bulls stepping in a little bit, but it was a little bit anemic, wasn't it? I mean, we had a lot of good signals produced. There was some nice price action showing up in some things, but if we take a look at the volume here, we were just a little bit on the anemic side, and we kind of lacked that momentum to really get things going. If we take a look at just an intraday 15-minute chart here, and just notice that we did try to recover, but we just really couldn't get her going. We did rally up and then pulled back, gave a lot of the day back, and now, we're looking at the futures just modestly positive. They're trying to push higher, wanting to be bullish. Of course, we have the employment situation number coming out here at 8:30 before the market opens. That could certainly move things around. Let's take a real quick look while we're talking about that. At the economic calendar, you can see that employment situation report here at 8:30 this morning. Now, consensus is this is going to be a very, very good number. I can't imagine we're going to flip tremendously in this and something that would really affect the market poorly. And they're expecting the overall unemployment rate to remain at near historic lows, at 4.1%. So tremendous strength there. Consumer sentiment is also showing tremendous strength, and it's actually expected to tick up slightly this in this report. So we'll wait and see. And then these two reports not expected to move the market, but these right here could certainly get us going during the day if that's what the market wants to key off of. Now, also, I should point this out. Next week on the economic calendar, and this could also be a factor, is we have the FOMC meeting next week with the interest rate announcement at 2 p.m. next Wednesday. So we could actually see the market just kind of stall if they're keying off of that interest rate increase, the FOMC decision, I should say, then the market could just continue to be a little bit choppy and a little bit light in volume. I don't know what's going to inspire the bulls to get them going here. We do want to keep an eye on that, but we also want to pay attention to the fact that volume's just a little bit light. We're a little anemic. Not a big surprise after such a tremendous run in the market that we need a little bit of rest, but just kind of keep that in mind as you plan your trading day ahead or the risk that you take as you move forward here. So you can see the diamonds did a really good job here, pulling back, holding support, holding trend. Everything is still looking really good here for the diamonds and all as well. We just need a little bit more energy to maybe pick up a little bit of momentum and start moving this higher. Let's take a look at the SPY. SPY, same situation. Nice little hold of this tiny support area here, holding trend. Everything is looking good here. As a matter of fact, I would say the SPY does look better than the diamonds chart because we really do have a Morningstar type pattern right here in these three candles suggesting a bullish bounce off of that level. So we just need a little bit more love in the volume, a little bit more energy, and that might help those bulls actually. Here's the thing that can occur. If the bulls can really get pushing, push, we could fire off a short squeeze because there's a lot of traders out there that got short this market. They just have that fundamental belief that the market is way overbanked and it's going to sell off. And if there's enough short interest out there, if the bulls can push and get going, it forces those short traders to buy to cover. And when they buy to cover, it just moves the market even higher, adding more and more pressure to short sellers. So we'll keep an eye on that. If that really gets going, we could see a very, very strong day as a result. If I don't know if it's today or next week, but we could see that really strong day if they squeeze those shorts hard. Let's take a look at the Qs. Now the Qs did a pretty good job yesterday rallying back to this resistance level, but it was not able to break through. Now this morning the Qs are showing bullishness in the futures and showing that they could gap above that little resistance area. And if that plays out and they can hold up there, the Qs will have broken their downtrend and possibly picked themselves back up out of this kind of ugly place that they were here temporarily, and may participate with the overall market on the bullish side. So kind of keep an eye on that. IWM, well, it's just really struggled all year, and IWM, not a big surprise in the fact that it pulled back, found this really big support area here, held that as support yesterday, trying to pick itself back up. And you can see this morning it's indicating just slightly higher at the moment, maybe finding a little bit of a reason to rally here if those bulls really are going to step in. So on the earnings calendar today, we only had like 8 companies potentially reporting today. None of them look like the kind of companies that are going to move the market, so I wouldn't be overly worried about those unless I owned one of them or was thinking about buying one of them. So kind of make sure you're checking those earnings reports on a regular basis. Let's take a quick look at the VIX. The VIX actually dropped off yesterday. It was interesting that when we were sinking, that the VIX really didn't respond higher. We had that one-day shock that we responded higher, but didn't really respond higher here. And now yesterday's bullish price action, the VIX did sink away. That gives us a little bit more confidence. See, when there's no fear in the market, there's no reason to sell. And if there's no reason to sell, then there's all kinds of reasons for the bulls to step in and maybe start pushing to the upside. So if that's the case, if we're not going to run into any issues of fear, then we would look for those bulls to start pushing this market higher. Let's take a look at T21.22. Now, T21.22 is nothing more than an illustration of a 4-week new high, new low ratio. And you can see during this last pullback, we've pulled back down here to this lower side. Now this is what I term down here as a bullish reversal zone. Down in here, you can see it's pretty darn consistent. We get down in these areas and we reverse back to the upside. Same is true on the upside. We have that bearish reversal zone here. If we get up into this area, we start looking for reasons or possibilities of that reversal. And so now we're back down here toward the lower side of that. We could actually see that could help us in moving this market back up. So let's kind of keep an eye on that. If the volume starts coming in, if those bulls really start stepping up, the market could really get inspired here and begin to crank it up higher and squeeze on those short traders. So with that, everyone, hey, I want to wish you all a fantastic Friday and a great profitable day. If this is the first time you've seen this information, please do me a favor. Click on that subscribe button and the follow me button on Facebook. And, please feel free to share this with anyone. I do this as part of my market preparation, and I put it out to try and help others with their preparation for the day. If you find it useful, please feel free to share it. Also, love it when you click those thumbs up buttons and drop a comment. And by the way, thank you for all the very, very kind comments recently. I really do appreciate it. You guys are the best. Please keep checking back every day. I put this out every single day. So you all have a great one, and I will talk to you all very, very soon. Have a great weekend.